Good afternoon, everyone, and welcome to our Twitch live stream. My name is Glenn Tompkins, Senior Instructor here at VectorVest. If you're normally here at Twitch on a normal basis, on a weekly basis, you notice now that this is a little bit different setup. Notice that there is no green screen behind me. It's just a white wall. So this is going to be a very exciting session. Stop laughing. We got a nice panel of distinguished guests, as I'd like to call them, instructors from the VectorVest educational department. And interesting, and put them up for a second. I want to go through who they all are. Starting all the way to my far right, interesting enough, to my far right, we have Jim Penna, who is the manager of the retirement services. And I look, and Jim has been here for 12 years. So thank you for being here, Jim. Next to him is Steve Chappell, who's been with VectorVest for 18 years. It's a long time. It's a long time. And he's got a lot of great information to share. He's actually one of my mentors and a good friend of mine as well. And he's the manager of...
Director of Trading Systems Development.
Director of Trading Systems Development. All right, so he's in the background doing a lot of things, especially for our Jockey Club subscribers. Next to him is Patrick France, senior instructor, has been here for 9 years. A lot of great information from him. He's got a lot of tech savvy. He's been in trading in the market for a long time. And right next to him is Todd Schaefer, who's been here for approximately 12 years. Is that correct?
That's right. It was a very good year.
It was a very good year. There's a song about that. It was a very good year. That's all I remember about the song. Anyway, so Todd is the manager of, dang it.
Uh-oh. That would be research.
Research, thank you. Now Todd, on the other hand, is when you look at the model portfolios, Todd plays a big role in putting those together for you on a yearly basis. So he does a lot of research. You go by his office, he's got searches running and back tests running up and down, in and out. So that's the panel that we have. And you know, I did a quick addition of the years. You got 66 years worth of educational experience from the VectorVest software here. So as I mentioned, this is going to be a very exciting day in Twitch for our live stream. And it's going to be all about picking hot stocks. And what is a hot stock? Well, a hot stock is a stock that's not cold. How about that? But on the other hand, a hot stock is a stock that's moving, a good momentum play, and a good opportunity for you to catch them as they're running and have an opportunity to make money. And if you're watching our daily color guard report on a nightly basis, that's where you're going to get those stocks. It's only there that you're going to get it. So if you're not a subscriber, this may be some incentive for you to at least take a trial for 30 days and get access to these hot stock picks. We recently did a special presentation on them, and in 1 month's worth of time, the net gain from all of the picks that we've done is up 33% in 1 month. So if you don't think that's hot, you need to check your temperature, make sure you're breathing, and all that kind of stuff, because I don't know what else is hot if that ain't hot. All right, so it is a special feature that we put into the daily color guard report on a nightly basis. You need to take care of it and take advantage of it, not take care of it, take advantage of it, and that's what we're going to do. So that's what a hot stock is all about, and we're going to use and build on our knowledge of how to utilize the VectorVest software to get you acclimated on some hot stocks that you can take advantage of right now. Now, there's going to be some things that we're going to talk about in regards to the right time to take advantage of it, but we're going to concentrate today on what they are and how we came up with finding those stocks. So just to let you know, we're not taking stocks from the audience today. All right, so normally on Twitch, I will entertain a lot of the statements or the questions that you have. Today is not going to be one of those days, unless between Daniel, by the way, Joey, can they still hear you if you say hi? Yell. Yeah. There's my producer, my producer, Joey, and next to him, you can actually hear Daniel as my super producer, Daniel. Say hi.
Hi.
There you go. So now they're both in the room. We are in our state-of-the-art Training Center. All right, so this is where we are. We're gonna have a great time, and
This is where the magic happens.
so now they're talking amongst themselves. Say it again.
Thank you.
Somebody loves your shirt.
Nice shirt.
All right, whatever. All right, we're gonna keep moving on for that. And
Benefits of being young,
It
friends.
is cute. That's cute.
it is cute.
It's
I
cute.
like that, Jim. It is cute. Way to go, Patrick. All right, so we're gonna have some fun. This is gonna be some fun. So we're gonna look at the stocks that we've picked. We're gonna talk about why we picked the stocks, and then each one of us is gonna chime in on the stocks that we've. So it's gonna be a real good panel. We're going to start looking at the homepage. Can they see the homepage, Joey? I don't know what they can see. So they can see the homepage. And Patrick wanted me to step up here and say, holy smokes, the market came back. But I'm not going to do that. So I just want to keep that in mind. I'm not going to do that, Patrick. No, I won't do that. We can see that we have a mixed market today. But coming from this homepage, and this is for the benefit of the new people who are not subscribers, this is what the VectorVest software looks like when you first open it up. It's got a plethora of information right here on that home page. But I'm going to go straight into the graphs, and I'm going to start looking at some of the stocks that we picked, starting with my own. Why? Because I want to get mine out of the way, let them get bombarded by the panel if it happens to go that way, and we're going to keep moving on. So, one of the hot stocks that I picked was PVG. Well, needless to say, we all know that gold is rocking and rolling, right? Well, I stayed right with that momentum, picking a gold stock. I'm looking at a graph over the last 3 months. I have set up on my graph a couple of different things. I'm looking at moving averages of an exponential moving average of 3 and 8 on my graph. I think it does a great job, whether you're a short-term trader or even a swing trader, to identify a good uptrending stock and get in on the 3-8 crossover, get out on the 3-8 cross, get back in. But just over the last 3 months, the stock has just been moving from the bottom left to the top right, which is the epitome of an upward moving stock. Stock hitting higher highs, higher lows, and even with today's activity, hitting a new high. I'm also looking at earnings per share. For those of you who are new, our earnings per share are forecasted. So rising earnings over the last 3 months to go along with a rising stock. And I'm also looking at volume because why? Volume is conviction. As I look at the stock is moving up, above average volume as the stock's price is moving up, I think it sets up really nicely for a hot stock. The 3 and the 8 just crossed recently to get you back in on 8/1 of 2019. Was that a good opportunity to get into the stock? I would argue and say that yes, it was. And even on a good day or a stock when it pulled back, that's a closed candle. The stock's price started at the top of the candle and came down. So, it was higher than the previous day's close, but it did give back some on the day of 8/5. But even with the pullback, the 3 and the 8 remained intact, keeping you in the stock. Good earnings per share, good volume. We still have more trading day left in the day, but relatively keeping up with the previous 5 candles over the last 5 days. That is my first pick. Does anybody have anything that they want to say about it? And if, watch your tongue, because I am the host.
Nice pick, Glenn. I think that's genius.
There you go.
was
Good
trying to pick that
way
stock.
to start that off, Todd. Way to start that
I want
off.
to be supportive.
Anybody else?
So, Glenn, I have a question.
Sure.
Now, when you're trading gold stocks, I'm going to guess that on our Monday night daily color guard report, when you watch our information on the gold bugs index, that helps you to decide whether or not gold overall is in an uptrend.
And that is a great statement, a great question in regards to that daily color guard report that I talked about in order to get these hot stocks. That's an added bonus. Every Monday we do something called to making sure the Midas touch on the gold stocks to make sure that you guys know when it's a good time and a bad time to be in gold. And we pretty much nailed a good entry point on gold to get us in on those Monday presentations. And man, has it panned out. Gold's been rocking, and we got you in. And again, for the benefit of the people who are not subscribers, that's an added incentive to want to at least take the trial for 30 days and get that kind of information. Nobody out there gives you this kind of information, detailed information, to prepare you for the next trading day and actually break down what happened on that current trading day. So that's a great, and you know something, the people that you're looking at in this room are the same people that, one, do the special presentations for you, and two, do the daily color guard report on a nightly basis. We're only missing one person, actually two. We're missing Jerry, and then we're also missing Kathy as well. So there's 5 of us, but 7 of us will do those presentations for you. So you're looking at the crux of the people who are here to educate you. Thus, we are the education department. Woo-hoo! Yeah.
Also, just to add to it, June 20th was the date that we got that official gold signal.
And thank you for verifying that. It was June 20th, as Patrick explained, that we said it was okay to be in gold. And right now, that's a month and a half's worth of time. Was that a great opportunity to take advantage of the gold? Who else did that for you? I don't know who else did that for you. I know we did. That's all that matters. And we got the footprint in the sand. You can go back to the Daily Color Guard report on that date to verify what Patrick just said. So we do have a footprint in the sand. It's not anything that we say willy-nilly. And again, for the benefit of the people who are not subscribers, everything we say is backed up within the software. So there you go. Anybody else have anything else to say about this outstanding stock?
I'm going to say it's not necessarily the best time to get into it right now.
Well, then you can just, I'm going to mute you. How about that? I'm going to mute you live.
Well, I'm going to play the contrarian on this one.
Go ahead.
You sense a little weakness on the current?
Well, yeah, it's been in a nice, great uptrend, but it hasn't pulled back at all over the last 3 months. We look at what the market's doing today. It opened up a lot lower. It's been coming back. I mean, I think if the market starts heading higher, gold and silver may take some sort of pullback. Not saying long term, but at least for the temporary, a mild pullback could be in the near future.
I'm going to address that. So now let's say that you're in this stock and the market does pull back. What do? I'm looking at the 3 and the 8 setup, the 3 and the 8 exponential moving average setup. What would be a good time for me to get out?
3 crossing below the 8.
Ta-da! And what would that do for me? Lock in some profits, would it not?
If you're getting in today, maybe not.
Well, if I'm already in it, and you're right, this is a hot stock. If I'm not in it already, at least I now have the means to know when to get out. I have a plan.
Exactly.
Right? And so I'm with you, and that's all right. Go ahead, Jim.
So, and this will relate to a lot of the stocks we look at today. So, what would be your entry point here if you weren't in it today? What would be a way to not get into that pullback?
Bingo. All right, so there you go. And Steve said you're preaching to the choir because he said amen. I like that, Steve. You said amen. Anyway, so what would I do to get into this hot stock at the right time? Make sure I'm buying a little higher than the high. Make sure that the stock's price is moving higher. If it doesn't, and the market does start to pull back, guess what? I won't get filled on an order. But any hot stock that you look at, out of all of the people that are here, all of the hot stocks that you look at, you need to keep in mind that you want to buy higher. Make sure you're buying into the market's price moving up.
Before you move on from PVG, for me, I assume that right after I buy it, the thing's going to tank, right? For me, the key to success in the long haul is the setup, right? Where's my exit point? How much risk am I taking on? What's my reward, right? Make sure I have that relationship set up. And if it tanks, okay, it tanks. I recognize it tanked. I'm going to keep the loss under control, stop out of it, and go find another one.
Yeah, you can allocate accordingly.
Yeah.
You know. Yeah.
So if I want to play that pivot, or if I want to play the 8 on my entry, right? Whichever. If I want to choose one of those 2 exit points, okay, fine. Set up the trade appropriately, and then.
So I took off the 3, and then I can use the 8 in and of itself by itself.
Yeah.
Nothing wrong with that. And you thought that 2 minutes was a long time, didn't you, Todd?
It is a long time.
Okay, it's not as long as you think, buddy.
When you're talking.
All right, I'm going to go look at my next stock. I'm going to look at my next stock, which is HMY, still maintaining the gold and silver. Same kind of scenario. The earnings for a certain amount of time here actually went flat, but they didn't fall. They remained constant, but then started a stair step and a nice big jump up here. Same kind of scenario, and I agree with what Patrick said. A little weakness could be showing up in the stock. Dojis on both of those stocks. On today's candle, which shows indecision for the day, but still, if you put in a buy stop limit order a little higher than the high, make sure that the stock's price is moving up before you buy it. If it doesn't hit that buy stop limit order, you won't get filled, just in case you're buying into weakness. Anybody have anything they want to say about this stock?
Want to take a bet on whether or not the stock opens higher or lower tomorrow?
No, I'm not betting that. That's not me. You know that's not me. I let the market come to me. I let the stock come to me, so I don't have to worry about that. Now, Patrick's a little bit more aggressive, and he's more in tune with that. I'm not. And that's the beautiful thing about this panel as well. You've got 5 different personalities in this room in regards to how we all go about picking hot stocks. But, no matter how you roll the dice, I hate that. No matter how you look at it, they're all together hot stocks in our own methodology. So there we go. Yes, Daniel.
Lower RV of 0.87.
Say lower RV of 0.87. Okay? You're telling me that because the stock's long-term upside potential? Or have a reason why you're telling me that?
This is Kirby. I just wanted to ask.
All right, so the lower RV of 0.87. So what does that mean, Kirby? In essence, that just means that the stock's long-term upside potential is not there. So what are we playing in this case? We're playing the hotnosity of the golden.
Here comes the Glen
the
Isles.
golden silvers. That's right. I said hotnosity. We're playing the hotnosity of an industry. But you were going to say something.
Or its
Patrick.
aptitude.
Oh, the what?
It's aptitude.
I don't like that. It's only it only sounds good when it comes from me.
out of
Go ahead.
I was going to say the actual word momentum, but
But momentum. But what we're playing
hot
is
nasty or hot
we're
nasty
playing
or
a
whatever
hot-
it is.
We're playing a hot stock. We're playing the hotnosity of the stock.
Every
And you
time
know
he says
something? When you look at the other indicators that VectorVest has to offer, that does tell me long term that stock may not have the potential to outperform a AAA corporate bond. So I understand that. But what is this all about? The hot stocks, and this is why I chose it. Any other comments? No? Good. We're moving on.
Alessandra said the bars were too thick, but you can't see the
The bars are too thin.
The
moving averages.
Yeah.
I do-
Alessandra, I told him to fix that
No,
earlier.
whatever. And the reason why we do it is because on Twitch, Daniel made me do it. So I'm putting it all on Daniel. It's all Daniel's fault.
It wasn't
I
me.
put it in there, Daniel.
I can't see him.
Now you can't see him. You see that, Alessandra? Now nobody can see him.
It's perfect.
Okay, I
They
know.
are there.
I know.
I can see him fine.
All right, let's go over to Steve Chappell's picks.
Oh boy.
All right, he started off with ENPH.
Yeah,
Steve, I'm gonna let you talk about why you picked it.
Well, I've been picking it all year, Glenn. You know,
Okay.
it's a stock that I don't know if people have ever heard of VectorVest, or from that perspective, then another layer to that would be the Jockey Club. We have a daily chat room where we get in and do a lot of active trading and looking at stocks that are of interest that we can invest money into. And we've been talking about this stock since January, actually. When I look at this stock right now, I think to myself, gee whiz, when we first started really paying attention to it, it was about $7 a share. Now you're kicking $30.45 at this point. But what provides me a lot of peace of mind when I have a product like VectorVest is I can simply look at the facts. And when we look at the earnings per share graphic on the bottom, what you have there is nice rising forecasted EPS. That's a 12-month leading forecasted earnings per share. So every data point you see there is forecasting where earnings per share should be a calendar year in the future. So it's a window into the future. It's not just what earnings are today and how well did they do this quarter compared to a year ago or last quarter. It's giving you an idea of where earnings are headed. And so what gravitates me to this stock still to this day is when you look at what's happening on the right-hand edge of that chart. Earnings is absolutely exploding. And there's a lot to learn about this stock, and when we get into the subject of microinverters and how it plays into solar energy, I think on a 2-minute session, that's probably good for another time. But they're having a huge impact in California. Lots of orders are rolling in. They're removing debt, they're adding revenue, and I think this is a tremendous pick, not only for now, being hot right now as we speak. Look how well it's fared, even as the market has really taken a pretty severe dip over the past several sessions. This stock has shrugged it off very quickly. So I think it has good long-term and short-term prospects, okay? Particularly if this market can hit rally mode here fairly soon. The reason I have Glenn and you might want to reduce the width of that line again. That is a 20 period. You can use either a simple or an exponential. I really don't have a preference. But the way I like to treat this stock, and the way I've been treating it all year, is, well, there's two perspectives. It looks good from a buy and hold perspective, or if you're more of an active trader, I've had a couple bouts with it this year already from that perspective. So I would either consider buying the new high tomorrow, 12.5 cents above wherever we closed today, or a nice alternative. You can see how reactive it is when it pulls back to the 20. And so I know some of you just don't, for whatever reason, just don't like the idea of buying stocks hitting a new high, so I'm going to give you an alternative. I think with this kind of a position here, you're going to be legging yourself into a good situation no matter which way you go. But you can simply wait for pullback to the 20 MA and good resumption. If you know a little bit about candlestick patterns, you know that can be very helpful. I can see a couple of haramis and some engulfings and things like that on this chart as it creates those what they call kisses in the technical analysis community. Okay, so you could wait for a kiss, look for good resumption after the kiss, use the buy stop order whether you do a limit or not, just to make sure that it's rising at execution. I think it's a great play.
Now I want to add to that. If you listen to what Steve just said, he had a lot of information that he already knew about while picking the stock. So you know what that does for you? It gives you a little bit more confidence that the stocks that we're presenting to you, some of us have done a little bit more homework than others. I'm going to tell you that I have not done nearly as much homework as Steve did on his stock. On the two stocks that I went, I looked at their graphs. Steve's stock not only is the epitome of an uptrending stock, but he's got a lot of knowledge behind it. He gave you the knowledge behind it. And you know something, that helps to enforce the idea that even though it is at a high, it may not be a bad play as long as you are buying as the stock is continuing to rise. No matter what hot stock you're looking at, having your buy stop or buy stop limit orders in place is going to be key. Just because you see it and it looks good and you say, okay, I'm gonna go buy it. And just like Todd said, you go buy the stock and it goes down. If you didn't have a plan in place, that's where you get hurt. But no matter what hot stock you see, make sure that you're buying into it as it is rising. The limit, the buy stop above the high, whether it's 12 cents or on a lower dollar stock, a little lower, make sure you're buying into a rising stock. But I like the information that he had behind why he picked it, and that gives you a little bit more confirmation or confidence that this is definitely a hot stock. All right, if nobody else has anything else, I'm going to go to his next one.
Chat loves it, by the way.
Say again?
I mean,
Chat loves it.
Chat loves it. Where you go?
Literally, thank you, Steve.
There you go. Thank you, Steve.
You're quite welcome.
it looks good. Gapped up, never broke past the low of the open from that gap up day. Hit new highs now.
Look at that. Perfect. Gapped up and never challenged that line.
Which is a nice setup.
Nice setup. Jim, you have to say something because the other three did.
Something.
Jim, you don't have to say anything.
No, I'm just echoing what these guys are talking about, and there's a lot of great things to it. And all I could say is when I'm done here today, I'm going to go look into it as a candidate for my retirement portfolio.
There you go. There you go. All right.
It may well turn into that.
It may there you go.
The thing that makes that unique from just any momentum play is that earnings pattern, right?
Yeah.
You got fundamentals driving that price action.
Yeah.
So it gives you better long-term
Yeah,
prospects.
they had two record quarters, quarter on quarter, here in a row, and they're seeing about 70% growth year on year. Tremendous growth story. There's hardly a hotter growth stock in the market than that one right there.
One thing I will say, it is overvalued quite significantly, though.
Yes, but put value on. So the question was about value. So one of the things that you might find interesting, though, if earnings continues to accelerate at the pace that it's accelerating now, that value is going to catch up to price pretty quick.
Good.
Just
I
only-
like that. That's good information right there.
Yep.
All right. Anybody else? All right. Let's go to Steve's next stock, which is
A
Kirkland Lake.
very undervalued stock. So Kirkland Lake. Kirkland Lake is, by many people's account these days, kind of the cream of the crop in the gold space. Again, it's another tremendous growth story. They're kicking back about 60% year-on-year growth here as well. on the earnings side of things. When you look at the chart, as far as gold is concerned, gold didn't really get hot this year until, well, we gave the call in June.
Yes.
Right. So this stock actually, if you give me a little bit more time, just do a year here, Glenn. It's had a couple of good runs already. It held together very well even when gold wasn't doing much. So here's a company that even when the underlying asset, I mean, gold has just been creamed over the past, how many years now, Todd?
I mean, a good 5 years.
At least a good 5 years.
2012
right?
told just recently.
Yeah, but in spite of all of that, here's the company that's been able to, for the most part, grow the bottom line quarter after quarter after quarter, year after year after year on a forecasted basis. So there's got to be something to be said for how well this company is run. I've seen the guys on CNBC, they seem very well put together, but this is what matters. Not so much what you see on TV and what they're talking about there, but the bottom line, and that's where is earnings going. So here again, I think it's a relatively good pick. You got to keep your eye on gold. There's a strong correlation to the movement, even though they have been one of the stronger players. So if you go up to the top, Glenn, let's go to a performance graph. You guys probably don't look at that. No. Go to stock and just click performance graph right there. It'll plot it against its industry. Okay. And so it clearly it kind of still moves in the same gyrations as the overall space itself, but it tends to outperform. And so if you're going to want to look for a gold stock that's going to keep pace and outperform its peers, I think here again, Kirkland is your logical choice.
The next stock in here is AU. So that is Patrick.
That is not me,
That is Todd.
but
Hey, you.
War Eagle.
Oh, is that you?
War Eagle on that one.
I like
Okay.
Auburn, I'm not going to lie.
Good. That's
All
fine.
right, there we go.
So kind of my approach here was I'm looking at this downdrafted market, right? I'm thinking of the situation I'm in. Obviously, gold has been performing. A lot will be impacted by how the market moves forward from here, whether we rally or do we just take a little bounce maybe and continue lower, right? So just looking at the stock viewer, or if you go to the viewers tab, Glenn, look at the industry viewer. I mean, there it is, right? High flying industry, the fastest moving or strongest uptrending industry, gold, silver mining. So, seems to me, at least on that basis, I got to think about being in that space, right? Just running on current conditions. So, if you right click on that, you can look at the stocks in that industry group. So now I'm in the best players by virtue of their VST score. There's Kirkland Lake, right? So the highest VST stocks in the strongest industry, right? So it's a typical top-down kind of approach, looking to buy strength in the strongest industry and sector, right? So difference, if I was going to try to compare and contrast a little bit, Kirkland Lake and AU, right? Well, here I am priced at 21 versus 47. Yeah, maybe RT values. I'm in a little bit stronger uptrend, but I have weaker fundamentals with a lower RS score.
Thanks,
Right.
Todd. You gave me a little boost.
I was going to say.
You know that
Actually, I'm gonna,
coming in second still means you're just the first loser.
That's right.
I'm going to chime in because
I was
got
thinking
two
about going
stocks
there.
in the gold industry too, and notice that between the three of us with the gold stocks that we picked, 1, 2, 3, 4, 4 out of them are 4 of them are in the top 10.
They're all strong, yeah.
and they're all strong in that industry. So
And so what I was noticing as I started looking at candidates, I noticed particularly in yesterday's market, right in that rally, you started seeing a lot of these leaders kind of breaking down a little bit.
Yeah.
So I want
Yeah.
to be in the space, but I wanted to look for a persistent price pattern that I thought would sustain.
Sure.
As long as I get the broader direction correct, then I'm in somebody who's likely to move. So let's take a look at the graph. All right, and for me, I think you already had this pulled up with my setup, right?
oh,
But
I
I'm
did. Do you want me?
Typically, yeah, good. I'm looking at price, earnings, and RT in my setup. Close enough. And for me, there's the two key things here, and put it on 6 months, because these are momentum plays, right? So I'm really looking for hard right edge performance. I care about the pattern leading into the hard right edge, but I'm looking at the hard right edge, and a big difference for me as I looked at these different charts is the RT on the hard right edge is accelerating still, right? You look to the price action, you can see that acceleration in the tall slope of that price action.
Yeah.
Now I'm pulling back from the high here, but to tell you the truth, okay, it's still in trend. I'm not, of course I'd rather not see it slowing down, but it is, so to Patrick's point. But as long as the trend continues, that's a solid play for me.
Anybody else?
Well, I can pretty much guarantee that these gold stocks are going to keep going up, and the way I can do that is that I just personally bought the Contra ETF, Dust. So I've actually gone contrarian, so that's how I know all of your gold stocks will continue to
I
rise.
see you also like to live dangerously.
Way to go. That's living life on the edge right there.
But yeah, so to your point, Glenn, yeah, let's make sure the market and the stock continue to follow through, and certainly know your exit point so you structure the trade correctly.
Yeah. Yeah, I'll say when you start creating a bunch of space with the 20 MA, and granted, some of my stocks are doing that right now too, okay? But you do run the risk of a minor pullback, even if it's only sideways to slightly down. But I think buying it on the higher, on the follow through is the key.
Yeah, and you can see it's done that previously, right? Where it gets overextended, and
Yep.
then it hasn't pulled back so much
It can
here
even
as it's just languished.
It can even slightly rise and pull back to the 20, you know.
Glenn, can you take out the date line? So one of the things I would look at, talk about in a jockey club a lot, but it's gapped up today. So if you wanted to get in, I mean, it's not too far off of its session low. Put your line in the sand at the low for the day, and if it breaks that,
Sure.
it tells you the gap up failed, and that's your exit. So
idea is to keep a tight stop, right?
So where's that
Yeah.
line out there, Glenn? So you're giving it 21 cents to the downside before you cut your loss?
Might come
Another-
down to 2 to just cut past the even dollar point, but yeah.
There you go.
Yeah.
You want to do that?
So what's the cool thing about that from a trade perspective? You're mitigating your losses. It gapped up, and if it didn't have follow through, it's still, even with the pullback, it's still at that level. It didn't go below the level of the low for the day. So what do? You leave it alone. And this is where people get nervous and they go, oh my gosh, it's pulling back, what to do, and they panic. Stop panic. Todd is right. Have your exits. Know where your plan is, where to get out of it, and you don't panic.
You should say this,
Uh-oh.
but you should know your exit before you get in.
That's very
Right?
true.
You say it a much better way.
Risk management begins at order entry.
There it is.
I forget who said it. I can't attribute it.
Plan your trades, trade your plan.
Risk management begins at order entry.
I forget where I got
Risk
it. I can't
management
attribute it.
begins. That's good.
I
That's
heard
some
it a long
good,
time
sound
ago, and it
advice.
stuck with me. I wish I could attribute it, but I didn't make it up.
I
But
think you said it, Jim.
yeah, I said yes. I wrote it.
But again, the different perspectives on the same stock is what's advantageous for all of you right now, and that's where you're learning. And again, a little bit of give back. Leave it alone. Don't panic. Stop panicking. Don't ever put yourself in a situation where you're going to panic. That's an emotion, and it's not a good one to have. All right, I'm going to take that off. That was. Anybody else have anything they want to say about that stock? AU. AU. You said that one before we started. AU. No. All right. Let me go back to the graphs.
So one of the things going back into that gold and silver, though, I'd be interested in looking into K92 right now.
Yep.
Because if you look at it, all the other stocks in the industry are moving higher. It's the only stock moving lower. I like that lower dollar price point because it gives you a lot more gain potential because you can buy more shares of it. I'd be interested to take a look deeper into that one, see what's going on with it. It's down today when everything else is doing so well.
Yeah, I think looking into it is a good move because it's got the Q. Usually means it's coming out of some kind of a bankruptcy type of an issue.
Yeah.
But what's most interesting to me is the current value. It's not easy for a stock in
That low.
VectorVest with that price point to have that kind of an RV and that kind of a value, which are two different things, right?
Yeah.
Value is what we feel it's worth. RV is its upside potential compared to a similar investment in a AAA bond, which is generally considered a safe return, right? So what's the growth rate? Go out to the right, 38%. Now, I do know some people in the Jockey Club who had trouble they were looking at it and going to buy it and had trouble getting shares. I think it might be a pink sheet. but I like the pick. I think it's an interesting pick.
I mean, with my aggressiveness, I tend to be more aggressive, so that's why
I like the
I'd be
pick.
interested in it. Yeah.
I like the pick. I picked it 3 days ago, actually. Yep.
And actually, the whole reason why we're even in this list is because Todd got us here, you know, and it's the hottest thing since sliced bread right now. Sliced bread is not that hot anymore, is it? Maybe it's the hottest thing since fire, electricity. Anyway, but interesting.
You're on your own, bud.
I am.
Bank stocks.
and
Hottest
so
thing since
backing
bank
out.
stocks. There
Is
you
this,
go.
is this a hot
Bank
stock
stocks?
panel?
Bank stocks.
Yeah, there you go.
Okay. Say again.
Is this a hot stock panel?
It's the hot stock.
Okay,
panel.
I'm just making sure.
All right, let's go back to the graphs. The next stock was Shake Shack.
Oh, wow.
Look at that. That's Todd's second
Now,
pick.
actually, this is interesting. So
I like burgers,
be-
Todd.
Before you shoot me down here because of the extension yesterday, let's talk about how I got here. So the same frame of reference. I'm thinking, well, okay, if I'm going to play to the long side, the market's been retreating, right? So it's hard to find leadership. I don't really know where the leadership is. So when I'm looking for leadership, where do I go? I look to the industry and sector performance again. And I like to use a 10-day window or the most recent pivot low. Well, I don't have a pivot low. So I went over to the Unisearch tool, using the same concept that I did with the industry viewer. I go to the Delta searches, sectors. I like to play the sector, and maybe this is because of my exposure to Canada. I've just gotten used to looking at the larger sectors. But see if you agree. So at the time I was doing this, the 10-day RT delta, so we're looking for the change of RT over the last 10 days. Which ones have increased the most? Run the search again there.
Yep.
That'll update. And the first thing I noticed was that all the deltas were negative. Right? Well, the market's been tanking, of course, right? So what I have is the top sectors that have been falling the least, essentially. Right? So at the time, we're looking at REITs and food. Same deal. Food was at the top of the list at the time I looked. Right click on it. Go look at the stocks in the sector. And the thing I like about the sector analysis is now instead of 5 candidates, I've got 209.
Yeah.
Right? And so now it becomes an issue of, pick your poison. You want to do a sort on relative safety and find the stocks that have the strongest fundamentals. You want to find the ones that are in the strongest uptrends. My memory is at the time, it was a VST sort. Could be wrong on that. Might have been a comfort index sort. But this is where I found the candidate. It's down now, middle of the page. A little bit pricier stock than I would normally look for a momentum play. 2 more down, go. Okay, 4. All right, so there we go. And look at the upside potential. Wow, earnings growth rate all of 9%, right? But they had, once you started looking at the graph, let's go back to the graph. They were in the news the day I was looking. They had just done a nice beat. They announced a partnership with Grubhub.
Yeah.
Right, so there's a lot of news driving their price performance. And I'm looking at that pattern on a 6-month graph. Right, they had come back down, tested the 20. Right, so I thought, well, let's see how this develops. Well, okay, yesterday I get this big pop. Well, I can still play this game, but what am I going to do on that kind of a price move? Yeah, you're usually looking at some retracement or at least some consolidation after that. So I can wait for some follow through, give it 2 or 3 bars, see if the price holds up and continues to advance, and if it does, buy the higher high. So I still like the trade long term, even though I'd prefer not to have given somebody else that money, right? But it's not enough that I want to throw it away. I think there's still some potential there.
I'm going to chime in the same thing that
Put
I
up
said.
earnings on there too. If
Yeah,
you
the
would.
EPS.
Same thing that I
EPS
said
and
earlier
RT.
is that just because the stock pulls back, you don't panic. Look at the trend. That's a 20-day moving average. That is a nice trend line, if you want to look at it from that perspective, to make sure that it's okay or not okay to be in the stock.
There were a lot of other nice candidates in this space. Most of them, though, were consolidating, kind of in this current market action, and it'd still be good candidates for me. I'm just looking for the breakout with the market starting to bounce a bit.
Yeah.
So you guys keep talking about buying at the highs. An old saying my dad taught me a long time ago is, instead of buying low, selling high, go with the mentality of buying high and selling higher. I think that could be true to these kind of stocks we're looking at right now.
Good momentum stocks. That's
Yeah.
ideally buy high, buy and sell higher.
Yeah.
Okay. Anybody else?
I think these have all been really solid picks so far.
Except for your guys' gold stocks.
Because you're a hater. You're such a hater. Patrick's
We'll
a
see.
hater. Write that down. Is Kirby in here? Kirby, write that down.
My dust
Patrick's a
trade
hater.
ensured your success. Don't worry.
Say again?
My dust trade ensured all of your success with this stuff.
I'm going to close out of that graph.
We'll buy you a cake or something.
Let's go back into the graphs. All right, that was Shake Shack HEI. That is
That's me, Glenn.
Jim Penna. Way to go, Jim. So here we go.
Yes, Glenn, we have, what we've just done when you pull that graph up is shift gears tremendously here at what we're looking at. As you mentioned earlier, as manager of retirement services, my outlook on a lot of these stocks has changed. I'm looking at a longer term, safer, more prudent stocks, overall, not that those aren't good quality stocks that we've seen already. But I'm looking at stocks, you'll see I'm starting on a 1-year graph for a stock like HEI Corp. We talk about hot stocks, and what I'm kind of characterizing mine at this point are more like a slow burn, right? I'm looking at a little bit longer term, so understand that as I go through these. We're looking at just a graph of a stock. This is a 1-year graph of HEICO Corp. It has been a wonderful stock. We own
Great
it
stock.
in our retirement portfolio. You can see these guys have already addressed earnings in that earnings graph on the subgraph, that lower left to upright pattern. I think I got this from Steve probably 10 years ago. There's no coincidence that the price of the stock continues to rise, as does the earnings. So that's the concept that I look at when I'm looking at the retirement-minded stocks when we talk about hot stocks. Now this actually could and should qualify as a hot stock even in the shorter term, but that's not what I'm looking at it as. If you go ahead and you could even put a 5-year on here, Glenn, if you wanted to, and we can see even the 5-year look, how earnings continue to grow and how that stock continues to move. I learned also a long time ago on the trading desk, 100 years ago when I worked on the trading desk, from one of the best traders I'd ever met. When you're looking at graphs and you're looking at a time frame that you're trading that in particular stock, that's the graph you want to look at. That's the time frame you're looking at. Now, what I'm doing is looking at a longer term, not so much a buy and hold, because there's still an investment strategy behind these stocks, but I'm looking at certainly a longer term. So I'm more apt to look at a 1-year graph, a 3 or 5-year graph when I'm looking for stocks like this. So for me, again, the slow burn stock for a quality stock in your retirement portfolio or your more conservative portfolio is a stock like HEI. And then Glenn, I know I'd asked you earlier, if you go to the viewers tab real quick, go to stock viewer. We had typed these in earlier. All you have to do is type them in to the search box up top. Oh, I guess we got to type them back. HEI, and you could put up NEE while we're up there. So he talked about doing homework on a stock, and you certainly should get all the information you can. But here you have just an abundance of information just from our stock viewer page. So again, HEI is at the top there, priced at 140. It's also overvalued, but Steve already made the point. It's a snapshot in time. As earnings rise, that value will continue to rise. At some point, we say they're likely to meet. If earnings continue to grow, we see a 20% earnings growth rate there, they'll continue to rise. What I focus on when I look at a stock like this, my homework consists of looking at relative safety, the consistency and predictability of a stock's financial performance. And I always say, what two better adjectives to define the type of stock that's in your retirement portfolio than consistent and predictable? So this is what we look at for the growth stock side of that. A great relative timing because it's doing well now, a comfort index of 1.58, and a nice earnings growth rate. It also pays a small dividend, but that's not our main purpose for buying it. So that's what we look at, a stock like HEICO. To me, that's a hot stock for a retirement-minded, a little bit longer-term portfolio.
Keep going to the right there, Glenn, on the dividend analysis. Look at that safety number, 99.
Yeah, the 99 comes in. It's a great The dividend safety is a proprietary number in
Excellent.
VectorVest.
That's right.
It's the one indicator that's not on a 0 to 2 scale. So it's 0 to 99. Anytime you find a dividend paying stock that has an RS above 1.4, that dividend safety is going to be at 99, right? Why? Because earnings are consistent and predictable. The dividend safety is directly related to the company's ability to make money. Now, I'm going to contradict myself just to segue into next era here at NEE with a dividend paying stock. So before you guys comment, I'll switch over to next era since we have it up here. Now, I changed gears here again because this is part of a dividend growth portfolio. So if I'm looking for a hot stock, again, depending on my objective, next era is one of the great ones here. You've got a dividend, $5. The yield is a little lower now because the stock has been going up, but
It's
I can't see
respectable.
the yield.
2.3.
2.3, and that was even higher, but the stock keeps moving up. So, of course, they work in an inverse relationship, so the yield is going down. But you've got a $5 dividend on the
These
stock.
days,
Yeah, I mean
It's not bad.
that's pretty good. So you're looking at a strong dividend safety. Now the number, if it hasn't already, that should be standing out to you is the growth rate. We have a little different outlook on our dividend growth stocks when we're looking for them. You'll see also the RS. Actually, that's a stronger RS than most of the dividend growth stocks we look for. And the reason is these are more mature companies. They have a free cash flow. The earnings aren't negative. They're still making money, positive. Their growth rate is slowed. But I'll comment more if you want to go ahead to the graph now on next era.
So the yield is outpacing, the earnings yield is outpacing the dividend yield.
yes.
Yes,
So
and a
in
great,
the long term, at a slower growth
Yeah,
or negative
great-
growth rate, it could come in jeopardy.
yeah, great
Long
point.
term.
When we calculate that payout ratio, the quickest way to do it is dividend safety. Anytime you have a dividend safety above 50, it's going to tell you that that payout ratio is favorable, and the ratio is what Todd just mentioned, where the earnings yield or the earnings per share, whichever one you want to use, is greater than the dividend they're paying out. If it's not, you've got issues, right? Because how long can they continue to pay the
Right.
dividend? So this is next era with, this is actually still a 5-year, but you'll see again the same thing. And if I didn't just explain that it's a dividend growth stock, it still looks like a hot stock, right? I mean, it's doing wonderfully as far as the price movement goes. You see the earnings growing, and then what's different here is now we have the dividend payout. This is just the dividend paid. Glenn, in this case, I'd like you to go to a 10-year graph, if you would. And it's what we used to call, it was called for something different, but I like to revamp the name, the Golden Staircase. Remember a long time ago?
Yeah.
But it wasn't for dividends,
I
but
do.
I'm reintroducing it. That's why I made Glenn put it in gold or yellowish down.
That's why you made me do
Yeah,
it. Okay,
exactly.
I got you.
So next year is what they call a dividend aristocrat.
Yeah.
A company that's not only paid but has grown their dividends year over year for at least the last 25 years. Many of them a lot more.
Would that be a drip stock too?
Yes, well, it would be a DRIP 25 plus.
Gotcha. Okay.
Right, so it has a dividend reinvestment plan, which is what the DRIP is,
Mhm.
and we have several watch lists in our viewers tab. DRIP 5 to 9, DRIP 10 to 24.
This is a 25
This
plus.
is a 25 plus, so this would be the aristocrat. So again, what that subgraph is showing is not only a paid dividend, but a growing dividend over a 10-year, and if we went back even further, you'd see it more than 25 years. So I picked these stocks because the price patterns fit even a shorter term. You can make it a 3-month graph, and we can look at it that way. But I shifted gears, well, maybe not on the 3-month, but still doing well. I shifted gears because this is the outlook we have, and we may have folks who are watching who may be more interested in this type of stock. So that was my rationale for my 2 slow burn stocks.
Slow
The
burns.
slow burners.
Are you not worried about the drop in earnings back in May?
Not even a little bit. Relative
Okay.
safety is still very strong. There will be glitches throughout. Not every stock is going to have that perfect straight line there. We've seen it happen before, and partially because it is a utility stock. Growing earnings is important, but not as important on, say, a growth type stock.
If
know,
this
so-
is a growth type and I'm trying to stay in it and I'm growing earnings, I'm getting a bigger payday every year.
Yeah, it's like
Or
getting a
every
raise.
actually every quarter.
Yeah.
I'm getting a bigger payday every
And
quarter.
you are combining capital appreciation over time along with that dividend payout. It's an amazing, and that does. We haven't even talked about reinvesting. Well, we did talk about DRIP, but reinvesting the dividends and getting that. But that was my idea behind these stocks because, again, I just wanted to give a little different outlook on it, maybe a little longer term look, more prudent side of things.
I'm taking notes on a couple of your picks.
So you know what?
Because I already own your picks. So,
So
my
you
hits
see,
first. I get the inside info on it.
this is the beautiful thing around this panel. I got Todd, who's a little bit more intricate in how he looks at things, and he just is. Sometimes I don't always agree with what he does, but he's really pinpoint intricate, whereas Patrick is a little bit more aggressive. Steve is somewhere between that aggressive, prudently aggressive type scenario. He's progressive. And I actually think myself as progressive as well, but he's a little bit more progressiver than me. And then I look at Jim. Jim is on the whole other side of the spectrum, but can still come up with stocks that are hot stocks. And he mentioned, even if you weren't looking at this as a retirement, these stocks are moving up. These are still hot stocks. If I take the earning per share off, I take the dividends off, I take all the background, all of the retirement background off of that, that's still a hot stock. So that's a hot stock with some longacity. Be careful, Glenn, because you're going to get yourself in trouble. This is a PG room.
We're going to lose that family-friendly tag.
Just to be on record, that was Glenn who said that.
All right, so
Luckily, it's all
I
recorded,
like the
yeah.
combination of the hotnosity with the longness. With the longness, yes.
Yeah,
Okay.
the way I'd say that is
What's that?
we run into so many people who are chasing yield,
Yeah.
but they're buying stocks that are moving against them faster than they're yielding.
Yep.
Right?
Yeah. Or
Yeah.
There are stocks out there that are doing what you want them to do and still yield.
That's
How
right.
about
Yeah,
that?
one of the golden
Well
rules
said.
is not to just simply go out and buy the highest yielding stock. I mean, we could sort the database and find dividend yields that are through the roof.
it's usually
Right.
a problem.
But yeah, there's you're setting yourself up for bad news. So
And that's something we just learned from the retirement guy, and Steve, and you put together. But there you
I
go.
think we all know that one.
We all know, and knowing is half the battle. All right, go Joe.
At least
All
I
right.
hope we all know that one.
Are we good? Yes. Anybody else have anything else they want to add to it? Good picks, actually, Jim. I really wanted to go after you because they were, but I can't. Those are good picks.
and hey, those are just two examples. VectorVest will find you a portfolio full of both of those type of stocks
Yeah.
when you
Excellent.
use the right parameters.
Yes, Daniel, with your hand up in the back.
We have a question on the price of the stock.
A question on.
They said it's kind of expensive.
Yeah.
Okay, so if it's too, I'll let you answer that. I have my own opinion about
Yeah,
that.
sure. Well, again, it always depends on your objective, but if you were building a portfolio, whether it's a trading portfolio or a retirement portfolio or anything in between, you're still going to allocate assets based on a dollar weighted scale. So just because it's a higher price stock, of course you might buy fewer shares. If you have that theoretical $100,000 portfolio, you put 10 grand into 10 positions theoretically, you're going to own the stock the same way you'd own more shares of an $80 stock or a $10 stock. So, again, it depends what your objective is and how you're allocating, but if by that sense, no one would own Amazon, right? It's too expensive.
The yield doesn't care what the price is.
Yeah, exactly. And the yield, when you take the yield into consideration. And so, I mean, it's a valid question, again, depending on your objective. Right?
Gotcha.
Depending on your objective.
They want to say thank you.
Yeah.
They
They
say
are
thank you.
certainly welcome.
All right.
And
But you know what?
on an individual pick basis, this is where options become attractive too, right? So,
That's where I was going to go, is with
So-
options.
Having said that, when we start talking about stocks like Amazon or what have you, they can still be very expensive. In this case, 6-month at the money options probably going to run you around
20
bucks.
Yeah.
I was going to say buy 2 shares and you can still brag at Thanksgiving that you own.
Yeah.
All right. Good picks, Jim.
Thank you.
Good picks. All right, now we get to Patrick. Oh, boy. There we go. All right. I'm messing with you, Patrick. You know I am. So I have you
I'm
on a
used to it.
3-month graph. Do you want it on a 3-month? Or
Yeah, can
Did you
you-
just call me a bad name?
No, I said I'm used to it.
Oh, okay.
Then he called you a bad name.
Then he called me the bad name. Go ahead.
Can you thin those lines out for
Yeah. Again, this is all Daniel's fault. Daniel made me do this long time ago.
And I'll make you do it.
I'm not doing it ever again. How about that? Okay. I put my foot down. How about that?
All right, so this one, I like it because it was moving sideways for a bit, just gapped up. Similar to what we were looking at with some of the gold stocks today that were gapping up. I would play it that way, take a little bit more aggressive of an approach to it rather than buying it above the high. I'd buy it, closer to the end of the day, make sure it's trading within that upper 25% of its trading ranges or today, and then put your stop right at the low of today's action. If it breaks below that, then obviously get out because it shows that it's, filling that gap, it's losing that momentum, it's exhausted. But stochastics is, getting close to that oversold territory, getting a nice big pop today, 3 and 8 just turning positive on it. As the old saying goes, scared money don't make no money. So on that, I'd be buying into it.
Papa says a lot of things, doesn't he?
Papa said a lot of things. But Papa was a Rolling Stones.
But that's the way I look at it. Gapping up, I like that. If you go back to a 1 year, I believe it's a fresh 1 year high. So that's what I like to call green line breakout. And those are typically really strong patterns to go off of. You have a huge spike in volume, kind of confirming that. As we talk about in the Jockey Club, or volume's conviction. So that speaks a lot about how much it's up today and that a lot of people are looking at it. The crowd mentality is jumping on board with it. One of my goals when I was looking for stocks was I had a feeling all these old guys with me were going to be taking a bunch of gold stocks, taking the easy route. So I made sure I got stocks that weren't in anything gold and silver. Just because I feel like gold and silver has been on a great run recently, but at the same time, has to have some sort of pullback to create new buying opportunities.
What was that story? The tortoise and the hare?
All I got out of that was all these old guys that he was going to be with. That's all I got out of that. Yeah. Especially because of Todd. But anyway.
All these old guys, blah, 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 blah.
No, it's good to mix it up. This is good.
I may be old, but I'm immature.
I made sure to stick with stocks. My goal was to find stocks that I thought could still do really well outside of gold and silver. So that was my goal with that. Here you got Match Group. Everybody's using online dating now. It's kind of hard to go wrong with that. If you toss on the
it's got to
earnings,
be earnings related, right?
I believe so as well. Yeah, go back to a 1 year on earnings.
I bet it's a
earnings are nice, steady rise as well.
Do you look at all that the longer trend is up, or are you really just playing the breakout?
I'm playing the breakout, but whenever I look at earnings, I like to leave 1 year graph, just to make sure over the last year. I feel like in a 3 month, 6 month time frame, looking at earnings, it can't really tell a good picture.
You're right.
So whenever I look at earnings, I always put it on 1 year just to check that aspect of it. But when I'm looking at my reason for buying it, I get confirmation from earnings that tells me it's a good stock, and then I jump on the price pattern that we're seeing today of the green line breakout.
Got higher lows leading to that too. So
Yeah,
the trend is up, right?
yeah. Have a nice steady uptrend, starting to gain some momentum.
Yeah.
So
Only thing I'd do is just check the news, see what actually drove it, just to make sure it's likely earnings.
I believe it was earnings. But yeah, that would be.
It's gotta be
my
a good thing, no matter what.
Yeah, something's going on.
Yeah.
So that was my first pick, going with Match.
Anybody else have anything else to say before we go? If you want to go before you go to the next one.
Well, for me, just check the news. Yeah.
Check the news. Okay.
I want to know why. That's the only reason.
Also, another factor I noticed was CI as well, 1.6. Extremely strong CI tells us it has that ability to bounce back if any sort of pullback occurs.
And look at the pullbacks. Pull back,
Yeah.
pull back, pull back, pull back. But look at, it doesn't stay long. Prior to back here, it doesn't stay long. It doesn't stay down very long. And that's what that CI indicator is all about.
So I like that. I think that was the one I found using our daily boomers.
Yep.
Anybody that's in a Jockey Club, I use it a lot there. Find some high momentum stocks for potential day trades, but you can also find stocks like these for swing trade opportunities as well for, catching good momentum plays. You notice it's been bouncing around from a buy to a hold for a while. Rather than some of the ones I take in the Jockey Club for day trades where I don't care, most likely they'll be sells, really beaten down. But for a swing trade opportunity, I mean, that's what you're looking for. Nice steady rise in price, and it's booming today. Good earnings, good CI. Yeah, so that was my first pick to go with today.
All right, you ready to go to the next one?
We can?
Okay.
All right, so this one's a little bit different of a setup. You have a good looking pattern from bottom left to upper right in price. During this most recent pullback, stocks pulled back, stochastics have cooled off a lot, got close to that oversold territory, telling us that we have an ability to start potentially moving up here in the near future. 3 still below the 8 a little bit right now, but it's getting really close for a good setup of the 3 crossing above the 8. Stochastics starting to come out of that oversold territory there. As it's been selling off a little bit off of that high, volume's been lightening up, telling me less and less people are really interested in selling it at that point. People aren't piling into it to keep momentum building to the downside right now. And if this market starts or continues to move higher like we've seen today, I think this has some good potential. You look at earnings, once again, earnings on a 1 year.
Solid.
Earnings steadily moving higher. Nice pattern since about the beginning of the year. Once again, it's outside of the gold and silver. CI wasn't bad either, I believe. I think CI was above 1.
Oh, I didn't save yours. That's what happened. Okay.
Sure it is with that graph pattern. I'm sure it is.
It's got to be.
1.28, not the best, but still not horrible, not bad at all. So it shows that it can bounce back nicely on a slight pullback. I do see this as a little bit more aggressive because it is, not at the new high right now. It is pulling back a little bit different than what we've looked at so far today. But with a higher CI, good earnings, nice setup.
So Patrick, what would you use to enter the 3 crossing above the 8 or stochastics crossover? Or?
So I'd like to see can you zoom? Yeah. So I'd like to see the %K go above the %D on the stochastics, start to move up, both moving higher, but then also confirmation from the 3 crossing above the 8. Preferably some higher volume relative to what it's been trading at.
Yep.
Because whenever you have that higher volume, it shows you that momentum or that crowd effect, everybody jumping into it. That would be kind of my confirmation that it's time to really get back in and that it's starting to move higher again.
Copy that.
So how are you going to deal with the prior swing? I assume that's not a target, right?
No.
So are you going to wait to break it, or are you going to take it and hang on?
Take it before. If you wanted to use that entry setup of getting in, on the 3 and the 8 crossover, just as Glenn was talking about earlier, you could use the 3 breaking down below the 8 if it doesn't, take off to that new high to cut your loss or minimize your loss quickly.
Yep.
But I mean, 45.
Use
One
that
thing to
doji
think
low,
about,
too.
just because it's been sideways for a little while, would be follow through on what you're saying. The 3 and the 8. But just start with like half size position. And then as you break through the high, add
One
to
more.
it.
Yeah.
Something to think about.
Or, I mean, if you jumped into it, on the aggressive approach, jumping into it today because it's up, and it's kind of moved sideways as the market's dropped a lot.
Yeah.
You could put a support level in on that most recent sideways action and use that up a little higher, right around there or so. There you go. What's that?
That's
point?
your line in the
I
sand.
know, but what's that? 43. So 43.40. So you're giving it 30-cent downside risk, but I mean, if it goes back to the previous high, you're almost at 50. So $4 upside, 30-cent downside.
Exactly. That's
There you
it's a good trade. Actually.
Good risk to reward ratio.
Yep.
How cool
Oversold?
is that? So now, again, I think we went through the gambit of a lot of different investment styles to procure why why we picked the stocks that we picked, and be able to substantiate why we got to pick the picks that we pick, and get to, as a group, talk about the stock picks. So, well-rounded all the way around, and man, we went over what we thought we were going to go over. We did, but that was good. That was good.
It's been fun, though.
Substantive. Is that a good word, Todd? Todd is my little dictionary.
That word was great, Glenn.
That's
It's even in the dictionary.
information, and hopefully you guys who tuned in today, especially if this is your first time, you got some insight into the belly of the education department. You
Is that
know,
a fat joke?
It's talking
Yes,
about well-rounded and bellies.
well-rounded and the belly. Come here, Joey. Let me show. No, okay. Well-rounded.
Bigger on camera.
My belly looks bigger on camera.
The camera puts
It
10
takes
pounds
a
there's
on
so
lot
many
of
things
work
I can say to that
hold
one.
on to this. But I think that you guys got a good feel of a lot of different perspectives, and I think that as you get to gravitate towards a program that's going to help you make money in the market, this kind of perspective, hopefully you feel more confident in knowing that these are the people that are giving you your nightly presentations. These are the people that are giving the special presentations. And again, one last time, I'm going to beat it just a little bit. If you're not a subscriber, this is a great opportunity to get a feel and get a taste of what we have to offer. And our goal is to help you guys make money. I'm going to do one last thing, keeping in mind with what the market is doing. These are great picks from when the market's going up. But when the market is showing a lot of its volatility, big up day, big down day, that kind of thing, again, don't panic. If you're in any of these hot stocks, have a plan on knowing when to get out of them. But I want to show you something. Going to the portfolios, this is where we put all of our hot picks. And I want to go, is this the right one? Crud, I'm in the wrong one. Well, that takes that out of the equation.
What are you trying to see? That's the hot picks.
This ain't the education.
But those are all the different
Keep going up.
groups,
That's the user
entries,
group.
though.
Oh, they
Those
are.
right there.
All right, let's go to 7. These are the hot picks. I wanted to go 8-1. All right. I want to let you know that sometimes the hot picks are going to be contra ETFs.
Yeah.
So we're going to give you the picks conducive to the market's atmosphere. All right. So yeah, we did all bullish picks today, but when we give the hot stocks at night, this was 5 days ago. 8.63% in 5 days. That's more than 1% a day from hot picks, folks. And it's taking, yeah, some of the stocks are not winning. Okay, that's fine. Some of the stocks are not winning, but there they are.
Actually, they're
That's
all
what I'm
winning.
looking for. Oh,
Yeah.
actually, they are all winning. But man, this
Oil
is
was getting smoked today.
this is where we get. So it's not all about just the bullish picks. When the market is moving down, we're going to give you the hot picks to play to the downside. So this was 5 days ago, 8.66%, rocking and rolling.
And Glenn, to add to that, though, does being bullish on gold really make them bullish picks, though?
Yeah, that's bullish bearish. And
So
You're
say it again.
vernacular.
So being bullish on gold, is that really?
Is that really being bullish on the overall market, or being bullish on the market?
Not all the time does. It used to be a direct correlation prior to 2008 that when the market went down, gold went up.
It's more tied to the dollar now.
It's more tied to the dollar now than the correlation in the market. So,
And
so even-
easing and macroeconomic factors.
So even though we picked bullish trades today, they weren't necessarily bullish on the market.
well,
That's
because
true.
we went and not only did we go with the gold, but I'm still going to go back. We went to the hottest freaking industry in the market right now. So those gold stocks were so right. We're not bullish on the market.
Yeah.
But we're bullish on the hottest stocks, the hottest industry. And Todd, when he made us go into the viewers, that's the hottest industry.
Always a bull market
Everybody's got with the software. You have the understanding that you can pull up the hottest industry at any point in time. Just that easy. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.